Stewardship, I believe, practiced in the right way leads to a gratitude, right? Like, wow, how blessed am
Yes.
I to be able to create and preserve wealth and be a
Yeah.
blessing for MVPs, most vulnerable people, a blessing for my family, a blessing for the community, a blessing for multiple generations, right?
And I think the challenge today, Brett, is that the financial world, I mean, let's give an example. I have this conversation with financial advisors all the time, like talking about something as simple as life insurance. A financial advisor will say, "Oh, you don't need permanent life insurance. You don't need whole life insurance. Like term is just fine because you're not going to need life insurance when you're 65 and you have enough assets." I said, "So let me get this right. Your plan is for your client to build up enough assets, cancel their life insurance essentially, and then spend down their assets until they die." And they're like, "Yeah, that's a very short-lived type of scenario." And you can do both. Like Warren Buffett has built all this wealth. He gives some of it to his children. He gives a lot of it away. He teaches them those values. But I think that's a very, I don't know if selfish is the right way, but it's a very short-sighted way that gives up a lot of the utility of the wealth that we built. And if we just restructure things, we can have, as you said in the beginning, so much more of an impact, not only during our lives, but during the lives of our future generations.
Yeah, I could agree with you more. What we refer to this as
Yeah.
stewardship over ownership mindset, right? Um,
Stewardship over ownership. I'm writing
yeah.
that down. I like that. Yeah.
Yeah, and so we have a podcast called Build It to Billions, and that's the whole thesis
Yeah.
is how to have a stewardship over ownership mindset and practice biblical billionaire principles. And this idea here back to multi-generational and structuring and
Yeah.
stewarding the wealth that we've
Yeah.
been blessed with, that we've worked hard for, that all of these things.
Yeah.
And so ownership taken in the wrong way tends to lead to more of an entitlement type of mentality. Like, and it's more about
Yeah.
me, how quickly can I get to
Yeah.
retirement and how quickly can I just live off of that? And it kind of stops
Yeah.
there. You're right. Kind of just spend it till it's gone.
Yeah.
Stewardship, I believe, practiced in the right way leads to a gratitude, right? Like, wow, how blessed am
Yes.
I to be able to create and preserve wealth and be a
Yeah.
blessing for MVPs, most vulnerable people, a blessing for my family, a blessing for the community,
Yeah.
a blessing for multiple generations, right?
Yeah.
And so when we take that mindset, stewardship over ownership, it's a privilege to look at and structure. And I think of it like in a Rubik's cube, and
Yeah.
each cube shows up and it's different colors on different sides,
Yeah.
and you got to figure out, hey, what sides do you want, what colors on, and how clear do you want it, and then what
Yeah.
team can help you move that cube in a way which delivers that freedom, that impact, that legacy.
Yeah.
But it definitely starts with
Yeah.
stewardship or ownership. And the other thing too is too many people, I think, focus on not unlocking truly passive income. And I think this is really
Mm.
big, Chris,
Yeah.
right? And in fact, I'm going through this right now. I've been in the industry really my whole life, building houses with my parents from the Bay Area, and then Marcus
Yeah.
and Millichap selling multifamily properties before the crash. The crash happens,
Yeah.
everything hits the fan, and we learn about the Deferred Sales Trust, and we help people with that. But what I found with all of this, and after about $500 million of sales of real estate transactions and businesses with the DST and all of this, what I found is that most don't have a laser focus on their what we call a TPI number, their truly passive income number. And let me
Mhm.
define this for you so that everyone is really clear
Yes,
on this.
please.
This
Yeah.
is called no shoes, no shirt, no problem. I want you to keep about Kenny Chesney with a guitar on the beat with his hat, his glasses on, no shirt on, no shoes, no shirt, no problem. And he's got the sand and he's playing his guitar, and he
Yeah.
just knows every month his royalty checks are showing up from his summertime songs, right? His summertime
Yeah.
blues, and it's just showing up passive. He no longer has to play another concert, no longer has to sell another record, because he knows that every month he has a certainty of conviction that money is showing up and it's going to be able to pay for his lifestyle, his expenses. But he doesn't stop there, because once he unlocks truly passive income, he can unlock maximum impact, okay? Even
Mm.
multiple
Yeah.
impact. But too often, I think where we get it wrong, some of the mistakes we make is we look for too many sources of income too quickly, So we
Okay.
get diluted focus gets diluted results. Okay. We look for too much. We don't take the gains when we should, right? Like we just hold on to the Bitcoin, we hold on to the real estate, we hold on to the business, and it
Mhm.
just keeps going. And we settle for, minimal cash flows or ROEs of 3 to 5%, return on equity of 3 to 5.
ROE. Yeah.
Yeah.
So take keep going and then we'll come back to that.
Yeah,
Yeah.
yeah, and so instead of like saying like what do we want? Well, I can tell you after, in my opinion, what we want truly passive income, meaning no shoes, no shirt, no problem, meaning what? 10, 20, 30, 40,000 a month, whatever it is for you and your family and your lifestyle, like figuring out a laser, what is that number? And then reverse engineering and putting all of your time and your energy into that one thing.
Yeah.
Right? Like build the truly passive income machine. And by that I mean don't be the person who has to own all the real estate or own all the businesses.
Right.
That's your active income. That's not truly passive. Find a place where it can pay you double digit returns, consistent durable cash flow, and it's going to pay you what you need per month. So I can tell you ours. Ours is about a 30,000 per month number. Okay. So we set a goal for 2 years, and we have found, and we work with some private debt groups that are paying 16 to 18% type of returns. And after vetting and looking through all this, where we focus like a laser, and we're going, okay, if we only put 500 in every year for the next 2 years, basically that'll be 2
Yep.
million. That'll basically, it pays about quarterly, but that'll basically pay about 30,000 per month, 25 to
Yeah.
30,000 per month. And I said, if all we did was just that, focus like a laser and take all the other blinds off, everything else that can be a distraction, that kind of here and there. And once that hits, that's the big domino that opens up the floodgates for, I think, freedom, flexibility,
Yeah.
peace of mind. And then the Kenny Chesney, I'm gonna get my guitar. And in fact, I'm gonna get my guitar and I'm gonna have a hat. I'm gonna have my glasses on. And the day that it happens, I'm gonna play. I'm gonna play. Maybe I'll come back on the podcast. We'll
There you
play
go.
this.
Yeah, next time I want you in there with your guitar.
But I'll land this plane real fast. A lot of people are stuck in their businesses, their real estate, and they have massive gains, but they haven't unlocked it because of the capital gains tax.
Yeah.
And so we solve that and we accelerate this truly passive income opportunity. I'll give you a quick story. Warren and Catherine, $2.5 million sale in Sacramento. They own the property just about free and clear. Their NOI was about 120,000. We showed this concept to them where we can unlock 190,000, but it was truly passive versus the active ownership of real estate and the liability. So we got them out of, he had a little bit of debt. So we got them out of debt. We got them diversified. We increased their cash on cash by 60+%. They were truly passive. The biggest part is they could spend time with their twin daughters, which was, they were 10 years old and they didn't want to waste the time working when they can be spending time with their kids right now, at least working as much as they wanted to, right? And that's the point, right? And when the kids are 18, they can go back and do more work, but that's where you got to get crystal clear on your family mission, vision, values, so that it's so simple to be like, yep, sell the thing, defer the tax, unlock truly passive income. Man, does it compound the impact for your family?